busy week for merger and acquisition activity. The Wall Street Journal reporting Dell is in advanced talks to acquire EMC. In a deal valued at about $50 billion, that would be the largest technology takeover ever. And the parent companies of Budweiser and Miller going back and forth over a huge tie-up. This is a big number here. SAB Miller says InBev's $104 billion offer is still undervaluing the company. So this is ongoing. I want to bring in Steve Howe right now. He is the U.S. chairman of EY and America's managing partner. Steve, good to see you. Thank you so much for joining us.
Thanks, Maria. It's great to be here.
I guess let me kick it off with your take on what's going on in the world. You're sitting with CEOs and chairmen all the time. Do you think that they are becoming more optimistic? Are they troubled? What's the headline out of those conversations?
I would say they're busy. First of all, it is incredibly volatile and challenging. I think the U.S. economy is moving along okay, and comparatively with the rest of the world, a lot better than okay. You look at the emerging markets, you look at what's happening with currencies, commodities, there is a lot of challenge. And then at the same time, in their sector, they're facing a challenge to innovate. There's disruption. So you just mentioned these two big deals. One of the things we believe we're going to continue to see is probably more transaction activity. You put all that challenge on the table in a low-rate environment, and we're probably going to see more of that.
Yeah, and we were talking about the energy space earlier, that perhaps we see deals in the energy space. But before I get to that, you mentioned emerging markets. Michael, how long has it been that we're talking about the emerging markets being under pressure? We've seen no let-up here at all, and this is a key area for American multinationals.
Well, yeah, it seems like it's been a few years now, and part of that is China, and China not being able to maintain that high level of growth, and it keeps ratcheting down. The other piece of that equation, which also does tie into China to a large extent, is the commodities game where, again, supply-demand factors mean there's a lot of pressure there, which is going to hurt certain exporters like Brazil and other countries like that.
Right. And then there are the sector stories like the energy story, Bob.
Yeah. So energy is one of the bright stars, had been for the year with energy independence. You and I have talked a lot about that. The auto industry. Housing is okay, to Steve's point. It's not off the charts like it used to be in 07 and 08. So you got a lot of goes ins and goes outs. And what I learned from my mentor, Jack Welch, is see the world the way it is, not the way you want to see it.
Right.
So we always start off with these grandiose forecasts of GDP of 3.5. You and I have talked about it. We'll be lucky to do around 2.3 or something like that. Steve's point about interest rates, I don't think we'll see the Fed move before year end. Maria, I don't know what Mike and Steve, in your opinion, is about that.
That's a good point that you make, though. See the world the way it is, like Jack Welch always would say, because the truth is everybody's expecting an interest rate hike from the Federal Reserve. The data hasn't been that.
Yeah, look, I'm still in the lower for longer camp. I've been talking about that for a while. But Steve, my question for you is, given that there's a lot of opinion out there that rates could go higher soon, are you seeing companies looking to take advantage of this window of lower rates? Is there that perception where there's sort of a rush to get deals done here?
Yeah, I do think that's a factor, Michael. And if you look at the combination of low interest rate environment and a strong U.S. currency, it is a window, and I think we are going to see that. I think people are also beginning to think maybe there's a rate move, but there's probably not multiple moves. We're going to get into the election cycle, so that means maybe it goes up once, but there's probably going to be a low rate environment for the next 12 to 18 months.
Increasingly, I'm hearing more about March than December.
Yes, exactly. And Steve, you and EY are hosting a big session today on activism, which is another, issue that we're facing today as in business as CEOs, the uncertainty of who's at your door, right?
Such an important topic. Thanks for bringing it up, Bob.
Totally right, Bob. The pressure to innovate, the disruption, and the activism on top of it. That means every day the CEOs coming into work in this volatile global environment, tremendous pressure to innovate. That means that certain companies are also going to be sellers in this environment because takes a lot of capital, takes a lot to drive. You're seeing that in energy with Cameron and Williams becoming sellers in transactions. So, again, I think transaction activity, we believe, is going to be on the table the next year.
So all of a sudden you deal with all of the issues of the day, like the slowing economy, like the issues in emerging markets, but then you've got an activist knocking at your door, and you're dealing with all this stuff in a fishbowl. And you've got to make some real decisions, which may very well be short-term decisions, because the world is watching and the markets are reacting.
I think what smart companies are doing now, Maria, it's not only those that have the activism inside, but others are saying, well, what if? We know what their scorecard looks like. What are we doing?
So is that the way you recommend executives to look at this? Have a plan regardless?
Absolutely. And we're trying to help on that as well. We're trying to help companies through our audit, tax, and consulting businesses. And on activism, our advice is don't wait. We can give you their scorecard. Think about what they're going to be looking at, and that's where you should be.
I was doing a session on this actually recently with some people who were involved in activist situations. Can you actually ask your board not to have private meetings with activists and investors? Because that's what happens, right? The activist calls the board and says, I want to talk to you about this, and that's how it begins.
Yeah.
But you can't do that, can you, Bob?
No, I mean, I think there's active investors and then there's activists, and I would differentiate those, Steve. When you go out and advise companies, and it's not a matter of if, to your point, it's when. And you just see the vulnerability. And to your earlier point, Maria, these are all very short-term kinds of initiatives where they're looking, put more leverage on, buy more stock, increase the dividends, cut your R&D, which is right at the heart of what Steve was talking about. It's counterproductive to what we have to do in today's environment.
Yes, and I think it's not all bad either. Sometimes everybody views the activist as evil. There's a range out there, and we're seeing some who are working cooperatively with boards, and boards likewise.
You're right, like a value act. I'm hearing good things about like a value act. I mean, I don't want to name names, but they're not necessarily bullying right off the bat, do this and do that, but trying to work with management.
Right, and trying to come in and be another member of the board with a different agenda. You can have different issues there, too, because they have sometimes a whole lot more information than the typical board member. They've got a team behind them and analytics, but we are seeing much more collaboration with some.
And real quick on the sectors that you think will consolidate before you go, you said you're going to see more transactions.
Yes, well, so the commodity price on top of rates and currency means in oil and gas, I think we're seeing some of that. Healthcare, I think the drive to be efficient, we've seen some big deals there as well. Bob mentioned hospitality and as another one. So I don't see any being immune, but those are some of the big ones we're seeing.
Steve, great insights. We love having you. Thanks so much.
Thank you, Maria.
Appreciate your time. Steve Howe is EY U.S. Chairman and America's Managing Partner.